Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, you already know what to do. So the market has been wild lately, guys. The Dow Jones dropped almost 1,000 points today. The S&P 500 not seeing the start of the year like this. The first 4 months of the start of this year have been worse than 1942. It ain't been this bad since half a century ago, guys. So that's insane. We know what's going on, guys. Like I told you guys, we know it's multiple different things that's going in and taking place to making the market do what it do. We got inflation going crazy, crazier than we ever seen in a 40-year period. We also have interest rates hiking at a, real aggressively to help tame inflation. We also have COVID going on. We also have the war going on. We also have Biden going on. We have a lot of different factors that's going into play on why this is happening. And one of the main things to put icing on the cake is retail investors, guys. We have millions and millions upon millions of retail investors that just heard the market, guys, like oversaturation, basically, with the GME and the AMC frenzy going on. We had, the market seeing so much traffic that it's trying to tame it. It's trying to get these people up out of here. It ain't trying to make everybody rich. If the market would have continued to up and up that we were seeing in 2020 when the pandemic first started, and after March, the market just was going crazy. If it would have continued on that cycle, so many people would be up right now, so up that they won't be trying to work, they won't be worried about the job or none of that, guys. And that's one of the main reasons why they keep this education out of the school systems. They can't educate everybody how to become independent and work for themselves and be business owners. If that's the case, who gonna be the person to to clean up the doo-doo? Who gonna be the person to get your orders? Who gonna be the person to cater you when you go to nice restaurants? Who gonna be the do boy? Who gonna be the do boy if everybody owning their own property and owning their own businesses and the bosses? If everybody the boss, we ain't gonna have nobody to be the workers. So that's why they keep this information. They don't keep it away from you like they do in other countries. In certain countries, they can't even access certain type of information. Whenever they try to look it up, it blocks them out. Now that's really holding you back. But in the United States, we actually is free. You free now. We ain't gonna put the information right in front of you for you to suck it up and become your own boss like that. But we ain't gonna hide it from you either. But we know they know how you operate. They know how to keep the distractions rolling. They know how to put all this different stuff in your placenta, so you won't be able to really focus on getting the bag and getting out of that box. That's why they have the information there. They ain't gonna teach it to you and drain it on you and make sure you understand it, but it's there. It's there for you to go get it if you want it. And they know 90% still isn't going to go and obtain this information, even though it's there, guys. So now things is changing though. 90% is still asleep, but that 20, 30%, 40% starting to wake up. The more that percentage starting to gap in that, it's starting to close. More people starting to venture off. What's going on? How to become my own boss, how to look at the stock market, how to do this, how to do that. More and more people are smartening up, guys. So with that being said, that's another major factor on why the market is doing what it's doing and why it haven't recovered is exactly it, guys. And these spikes in between, if everything is bad as it seems, why is we having these spikes? Why is we having these major rips just to go right back down? That's because they can't continue to they gotta have that in there. And just think about that for a second. They gotta have that in there, because if the market was to just to trend down and down and down and down and down and down and down, it still would be, that's how you know the market manipulated, because it'll be taking candy from a baby. See, people that's trying to buy puts now and bet against the market, that's where the spikes coming in at, because they trying to take your money. They trying to take that money away from you. The market should be going down and down and down until the feds come out with some type of news that they help tame inflation, that the balance sheet has shrunken, everything is on balance now. Then the market will start to recover and start to rise. Other than that, the market should be trending down and down and down. It should be down, but they having these spikes in order to further manipulate the retail investors. They know every time you see the price going up, you get excited, you want to buy, and then when you buy, and the price quickly reverse on you, now you scared all of a sudden. Now you selling again for a loss, and it's continue to eat at your account, eating and eating and eating until you don't have no more funds left to even do nothing, guys. And like I told you guys, the rich is using this opportunity to get even richer. This is going to be, you know, one of the craziest times in history for people to actually get involved in the market now and really grow their wealth, guys. Like, if you know somebody in your family or anybody that's not participating in the market right now, or, you know, scared of the market or anything, you definitely need to be letting them know now is the time to buy, guys. People is not in the market every day just looking for opportunities and buying things. A lot of smart investors sit back and wait, and they have cash as a position, sitting back waiting for opportunities like this. This is like a once in a lifetime opportunity, and not once in a lifetime because it's going to happen throughout our life, but these times of this happening is very rare. It happened every so often, every 5 years, every 10 years, every 20 years, every so often a big shift in the economy will happen and put fear out there, and they'll say a recession coming and all that good stuff to put fear and to bring the stock market down, guys. It happens time and time again. These are the time you need to be excited. These is the time you need to be greedy. These is the times, guys. And like I say, it's approaching fast. And what I mean exactly by that, that's AMC, guys. AMC earnings is approaching very, very fast. And what the expectations for the earnings is out of the water, is out of the park, guys. And if these things, and if the expectations is already out of the park, and if we beat expectations, that should be a crazy buy signal for a lot of investors that's on the sideline waiting to get an AMC, and also that's already in AMC. That will probably make them want to buy even more. So I do believe crazy buying pressure is approaching, guys, because there's already two factors into play. We already in the buy zone, being for the fact that we came down, closed that gap at 1587, came down to that $14, $15 range. We already in the buy territory. This 15, 14, 13, that's buy zone. Buy, regardless of what's to come or what's to happen. But on top of that, we have earnings approaching May 9th after the market is closed, and expectations is $724.4 million. That's up 388.5% from the year ago quarter, guys. That's insane. That's a big percentage, and I'm pretty sure if we beat expectations, and I know we should come close to near that. I don't know for a fact if we're going to beat expectations, but if we do, that's going to be a great signal on top of the buy signal that we already have at these levels. So regardless if AMC want to continue to trade at these levels for the next week, we hover around this area, and then earnings come out and we kill them, this thing that could be our boost, guys. That could be what get us that next trigger to get us sending off. Hopefully we be already gone from these levels, already trending back up towards the mid 20s, near 30 by the time that time even come, guys. At least near the 20s, 23, that major resistance. If we could already be trading near that area prior to earnings being released after market close on May 9th, that could also be a great trigger, guys, and that could trigger something. So you already know, guys. Also, Adam Abrams has made more in the past 2 years during the pandemic than he has made in the 4 previous years prior, guys. In 2021, compensation was $18.9 million, and in 2020, his compensation was $20.9 million, and in 2019, his compensation was only $9.6 million, guys. So we know somebody eating out of this situation, and you already know, guys. Like I told you, guys, if you scared, if you nervous, if you over leveraged or anything like that, keep this as a learning lesson. And also, once you're able to do so, when the price go up, which I do believe it will do again, that's when you want to shave, get yourself in a comfortable position to where you could just sit back, relax, and go on about your life, guys. So you already know, that's all I got for this video. I love y'all. Y'all already know what to do. Add your boy on Instagram at the B Hayes Show. We out. God bless you, and we go.